If you have a business, receive a salary, or invest in the stock market, this interests you. The IRS has just published the inflation-adjusted tax brackets for the year 2026. The good news, millions of taxpayers will be able to report more income in lower tax brackets, which means less taxes for many people. We will also have higher standard deductions, which further reduce the amount of income that actually pays taxes. If you are an investor, more of your capital gains will fall into more favorable brackets. And if you are a saver, you will be able to contribute more money to your HSA, your retirement accounts, and other tax advantage plans. My name is Pedro Henriquez, licensed EA and tax planner in all 50 states, and director of Henriquez Accounting and Tax Services. I already studied the changes directly from the IRS to explain them to you simply. Let's get started. Many believe that if they are in the 22% bracket, then all their income is taxed at 22%. That is incorrect. The system works like buckets. The first part of your income goes into the bucket with the lowest rate. When it is filled, the additional income moves to the next bucket with a slightly higher rate, and so on. For example, if you earn $100,000 as a single taxpayer, you do not pay everything at the highest rate. Different portions of your income are taxed at different rates. Large jumps, such as from 12% to 22% or from 24% to 32%, are where a good tax strategy can save you thousands of dollars a year. If you file jointly as married, you can report almost double the income in many of the same brackets. This means that a married couple can earn more than 6 figures and still stay in relatively low tax brackets if they properly utilize deductions and retirement accounts. The filing status is key to an effective tax strategy. The standard deduction also increases in 2026, and 90% of taxpayers use it. A higher standard deduction means less income is automatically subject to taxes. If you normally itemize mortgage, donations, medical expenses, salt, etc., now the threshold to surpass the standard deduction is a bit higher. For some people, itemized deductions will remain better. For others, the standard will be enough. It all depends on your personal situation. Now, something that affects almost everyone: capital gains in 2026. If you buy an asset, stocks, funds, a property, and sell it for more than you paid, you generate a capital gain. If you sell it within a year, it's a short-term gain, and it is taxed at the same rates as your normal income. If you keep it for more than a year, it is a long-term gain with preferential rates, 0%, 15%, or 20%. Here comes the important part. Many people, especially retirees or people with moderate incomes, will be able to qualify for the 0% bracket on long-term capital gains. That means you could sell investments and pay 0% in federal taxes on those gains if your taxable income falls within the right range. This is a huge tax planning opportunity. Realize gains without paying taxes, rebalance your portfolio, diversify investments without a significant tax impact. Very few people use this strategy, but it can save you thousands. We will also see increases in contribution limits for 401 and 403, traditional IRA and Roth IRA, HSA, other tax advantage plans. These accounts are powerful tools to reduce your taxes and build long-term wealth. Many taxpayers are not taking advantage of these benefits, and that's why they lose money every year. Here is the summary. Tax brackets change, the standard deduction increases, capital gains rules change, and contribution limits to retirement accounts go up. All of this can cost you money or help you pay less in taxes legally if you have a strategy. If you want a PDF with the 2026 segments, write brackets or send me a message. And if you want my team and me to prepare a personalized tax strategy to reduce your taxes and build wealth, you can apply to work with me at Henriquez Accounting and Tax Services. I am Pedro Henriquez, a licensed EA and tax planner in all 50 states, and I am here to help you keep more of your money.